Hello, everybody. I am very pleased to interview and have another series of the Gershman Group's interviews with one of the leaders in our business, an icon in our business, who has built boutiques like Alex Brown, Deutsche Bank, and now is building an independent platform that is really leading edge. And with that, I'd like to introduce Haig, Ariyan, and really appreciate the opportunity to have you speak with us today.
Thank you, Roger. It's nice to be here. Thank you for that glowing introduction. I appreciate it very much. Thank you.
Well, you really are. I mean, there's very few leaders in the wealth management business that have a reputation like you do. Now, you were an advisor, okay? You sat in their seat, you know what they go through every day, but very few, right, in our industry that have your reputation. Why do advisors gravitate towards you? What is that? What is that secret sauce, so to speak?
Well, it's again very flattering and means a great deal to me. And I thank you for saying that. I like to think that it's true. Look, my style has always been, I'm an FA. I started as a financial advisor. I fancy myself a financial advisor today, although many years ago I did go into management. I understand what financial advisors go through every day, the challenges of building a business, maintaining a business, and most of all, taking care of your clients. And so I've always managed the businesses from the perspective of getting it done for the client, who is, for the firms, the financial advisor. But also, Roger, one of the things I've tried to do, and I do without compromise, is I'm extremely transparent. I'm very honest. I'm very transparent. And I like to think that although that at times might have some cost to it in the world that we live in, net by far, it's absolutely served me well. And I like to think that it has led for people to be able to trust me and be it, and that therefore I am able to be a better partner to financial advisors and to ultimately to their teams.
So you led Alex Brown, led Deutsche Bank, and Deutsche Bank to Alex Brown again, right? Raymond James. And so you now have exiting the business, right? After so many years. How many years has it been?
So I was in the big firm side of the business for 30 years, and 26 of those were at Alex Brown, of which Deutsche Bank was, I believe, 22 of those 26 years after Deutsche Bank acquired Alex Brown through the acquisition of Bankers Trust. And I just want to clarify, I think this is obvious and everyone knows this, and I know you do too, but I did not lead Deutsche Bank. I led wealth management in the Americas, which included Alex Brown, and it included the legacy private banking business. Ultimately, when I left, I was responsible for that business for Deutsche Bank in the Americas. Prior to that, I was co-head of that business, and prior to that, I was the head of private client services, which was in fact Alex Brown, which was a great honor. And it was, working for a European bank certainly has its challenges when you're running a private client business in the United States. The commission model is something that is a bit, no pun intended, but foreign to the European banks' knowledge and understanding. So it was a magnificent learning experience, but most importantly, it gave me the opportunity to grow closer with my financial advisors because we truly were in it together within these large European organizations. So it was, and that's where I served as a financial advisor for most of my career. It was within the Alex Brown division of Deutsche Bank.
Right. And then moving to the Raymond James platform, a domestic platform, a different platform, right? Culturally, capabilities wise, but still a really good marriage, and with its own challenges, right? I mean, you have an international bank at Deutsche Bank, now you have a domestic bank with its own challenges. And so you finally made the decision to exit. And why exit from the wealth management business of banks and brokerage firms to, it's an obvious question, right? This is where the trend is, but what made you make this decision?
So Roger, for me, it wasn't just the trend. It was very much a personal decision, and I'll say, and I'm very proud to say this. I believe Raymond James is the best large firm in the wealth management business today, and I stand by that. The Alex Brown business being divested out of Deutsche Bank into the arms of Raymond James was a very, very good thing for Alex Brown, for the financial advisors, for their clients, and for Raymond James. And it was for me personally as well. I think we contributed a lot to that organization, making it better. And I know that that organization contributed a lot to us, making us better. However, for me, the entrepreneurial drive to grow a business again did not get diffused while I was part of Raymond James, and the team there gave me a great deal of responsibility, and I think I was very proud of what we achieved during that period of time. But I really was presented a unique opportunity by Redbird Capital, who wanted to get my view on the wealth space and where they saw the wealth space going. And when I gave them that view, and I was very, very clear in my strategic view, which I'm happy to share with you and your listeners, but we very much aligned strategically, and that brought us to the table to design a strategy to create what is the holding company of Arax Investment Partners, which to date has already made a number of investments and found a number of partners. So the opportunity the reason I left Alex Brown and Raymond James was much more so personal desire to build something again, to do something entrepreneurial, and the cultural and commercial and strategic alignment I had with my partners at Redbird.
Got it. And so Alex Brown advisors now have a choice, right? The choice is to fold into Raymond James and continue on that excellent platform. They also have a choice of going the 1099 platform as well, which is really, one of the best in the business. They also have lots of other choices, such as your organization and many others in starting their own RIA. So this level of sophistication, Alex Brown, Deutsche Bank, right? How are you able to take those very sophisticated business from lending to hedge funds and alternative investments and structured notes and very sophisticated products and services that you were holding on your previous companies, and how you transpose that into the independent space?
That's a great question, Roger. When you're in a firm like Deutsche Bank or Alex Brown, and you're doing your business with clients who are sophisticated and are very demanding, you inherently have to up your game. You inherently have to make sure that you're having the products, services, solutions that they need, and that you understand them, okay? And that the people behind you in those respective departments understand them. But when you're there and you're doing that business, you don't necessarily know that it's more sophisticated or differentiated from what the other firms do until you go to one of those firms. Mm-hmm. And then you realize, wow, we are operating at a little bit of a level here that's different than what some of these firms are accustomed to, or what they've really built their franchises upon. So what you do, therefore, is you then drive and influence and force your partners to up their game and learn the products. And so our experience at Raymond James was generally very positive in that regard. There's a meaningful amount of governance and risk controls there that were very good for us, that helped hone our advisors and helped avoid a lot of the pitfalls that large European banks like Deutsche Bank ended up running into in the great financial crisis. But when you couple that with a desire for more sophistication and a desire to be able to work with the wealthiest, most demanding clients in the country, it's a very, very good formula for success. So in the independent world, you now have a number of firms who provide derivative solutions, who provide banking and balance sheet solutions, who provide alternative investment solutions, which have now been, as you know, you've heard the term, democratized for the broader population to get access to. Well, the independent channels have been part of that democratization, right? And so those product solutions and strategies that historically had been designed for the ultra high net worth and the high net worth, and still are designed for that client demographic, are now readily available in the independent channels from a number of these providers who now realize, wow, this trend towards independence is not billions of dollars, it's hundreds of billions, if not trillions of dollars. And therefore, we need to be able to access it. And I will say this, the most sophisticated and demanding financial advisors and some of the wealthiest clients in the country are doing much of their business with independent financial advisors and RIAs. And that's a validation that they can, in fact, get those solutions there. And within Arax and the ecosystem we're creating, and within the firms we're already acquiring, we are prioritizing those solutions. Examples of that, the first investment we made was in a wealth planning firm called Robin Glenn. We lifted them out of a multifamily office. They are 3 or 4 of the most sophisticated trust and estate attorneys that you will meet, who are doing some of the most creative and impactful solutions for wealthy families, and oftentimes delivering insurance solutions to meet the need, or other strategies to ultimately meet the need that the plans created around. We started with planning. That was step number 1. What attracted us to Ashton Thomas, they had a very robust private wealth platform of products and solutions, but also had a very sophisticated trust and estate team, and also had a tax planning practice, which I have always viewed as a good complement to a wealth management business. You've seen many tax practices build wealth practices out of their tax base, but you haven't seen many wealth practices build a tax practice out of their wealth base. And what that to me is not that we're going to build a massive tax planning business, but to me what it means is that the FAs within our ecosystem can solve for their clients' tax questions and their tax planning and their tax returns as part of their overall financial services solution.
Really neat. And so, also a big differentiator is, at banks, you're captive to the firm, and, at times the firms get into their own issues with lending or other regulatory issues. You're completely open architecture now, and you can grab from different banks and firms to deliver the service that you need. So what is the opportunity for an advisor to join Ashton Thomas as a, let's look at a model team, $5 million in revenue, doing $750 million in assets, and sophisticated business and the right fit. What does that look like as far as you bringing that team in?
Roger, I will tell you, there's really, I think, 3 main verticals that a financial advisor should think about when they think about Arax, myself, and the Ashton Thomas and the partnership we're creating. First, the breakaway teams who are seeking to go into the independent RIA world and have equity in what they're doing, but do not want to be burdened with creating their own firm and much prefer to be an equity partner on a W-2 basis, right? So within Ashton Thomas, we are currently building that out with very, very, I would say, not generous, but very, very deserved and robust financial packages, including equity. Okay, so it's very important to me that we are all partners, and our equity is not, it's not fake equity. It's real equity in the business that we're creating together. So although we're acquiring practices and lifting them out, we are making it clear that a 30 to 40% stake being maintained by that FA team is critically important. And it's not just important, it's required, right? We all are growing this together. The second way that an FA should think about us is that if they truly want to lift out, yet be independent, they want to operate on a 1099 basis, we have the infrastructure, not just through the Ashton Thomas acquisition, but also through a broker-dealer acquisition that we're going to be announcing very soon, also through the wealth planning acquisition that we've already made, and through the multi-custodial capabilities that have been built within the firms that we've partnered with, that we have the ability to finance and set up firms, teams, if they wish to lift out and create their own firm and operate on a 1099 basis. And so that is also something that's very attractive to many teams. But the third vertical that your audience should be aware of is one that you've already been very helpful to us with, Roger. And this is, in fact, in the RIA space itself, in the independent RIA space itself. Firms that are seeking a partner who can bring them capital, who can bring them the capital to monetize or capital to grow, who can provide them with more infrastructure, more compliance capabilities, more product solutions. So these RIAs who wish to enter into that a partnership like that and tuck into a pure advisory model, we're also very well equipped to do that. So what this is a reflection of, Roger, is that Arax Investment Partners is just the holding company, right? That is driving the strategy that is a reflection of flexibility, right? One thing I've learned in more than 30 years in the business, and it amazes me that many of the banks and many of the larger firms refuse to embrace this or accept this. The financial advisor owns their business. They own their client relationships. Any big companies that fantasize about the fact that the clients are doing business with them need to get past that fantasy. The reality is, if the financial advisors are not there, that business is likely not going to get done. Doesn't mean that there's not capabilities and resources of these major firms that are vital to the relationship. Of course there are. But the driver of it is, in fact, going to be the financial advisor. So my point in saying that is that by providing a choice to financial advisors as to how they want the future state of their business to look, whether it's on a W-2 basis or a 1099 basis, with equity, without equity, or as an RIA today that wants to partner with a larger organization, we are well equipped to do that. And by the way, at the early stages of what we're doing, a great opportunity to build something together. And we're truly committed to building the next great wealth organization in the US.
And you certainly have capital behind you. Talk a little bit about Redbird. How's the partnership? And can financial advisors access their funds? And how does an advisor lever that relationship?
Sure. So Redbird has been a wonderful partner out of the gate. My direct partner is Mike Zabik, who runs financial services at Redbird. Redbird's founded by Jerry Cardinal, who ran private investing at Goldman Sachs for 20 years. And Jerry said something to me once that really resonated, right? He said, Haig, I don't want you to think about us as a firm that writes checks. That's not what we do. We're a firm that writes business plans. And we write business plans with operating partners like you. And this really resonated with me, right? Because we're essentially, Arax was a startup that's going out and buying existing companies and operating companies, and we're building this together. So we wrote this business plan together, admittedly with the vision that very much was driven by myself and my team from our 30 plus years of experience in the profession. And then Redbird has been a very, very flexible partner, very patient capital, very flexible partner. So if we see an opportunity that is differentiated and somewhat unique, maybe it's slightly broken, maybe it's pristine, or maybe it's trading at a significant premium, or maybe it's trading at a meaningful discount. We are fully flexible to take a look at all of these opportunities. And I think the market's caught on to that, Roger, and we're seeing a lot of great opportunities, but we're being extremely selective. The key is I need to always make sure that our platform and our ecosystem is one that the best financial advisor teams that today might reside at Merrill Lynch or UBS or Wells Fargo or at Alex Brown or at Raymond James, that these FA teams, they're the ultimate arbiters of whether or not we're building the right thing, right? So my litmus test is trying to look through their lens and say, okay, we are acquiring the right firms, we're building the right platform that will attract some of the best financial advisors in the country.
And so what sets your deals apart? What is your
deal?
Yeah,
Roger, think about our deals and the economics of our deals. First of all, from a quantum standpoint, they're very attractive, okay? So a financial advisor, a team, and or a firm gets treated like they own their business because they do, okay? And so we treat our offers as asset purchases. We are purchasing the future goodwill that only that financial advisor can deliver, okay? So therefore, our offers are to purchase a majority stake which is essentially an acquisition, but then the FA team and or firm has to roll over, as I said before, 30 to 40% of the equity. And that equity is pari passu with the equity that I'm participating in, that my team is participating in. And our goal is to build a wealth management organization that we're all going to be proud of, but at the same time, ensuring that our partners and ourselves will benefit from the ownership of that equity. So I see so many firms that have come out with that same pitch, and yet it's so hard for financial advisors to define what their equity is, to define what that equity looks like. We don't have that problem, right? You clearly know what your equity is. You clearly know the entry point at which you came in, and you clearly know what our goal is. Now, clearly, we can't say what it will be worth. We have our goals, we have our targets, and we have our aspirations. And ultimately, the cash amount that an advisor gets when we partner is right in line with the major firms and what they're paying, and accretive to that and incremental to that is in fact the equity. Also, one point I would say, Roger, that's very important, and forgive me for doing a disclaimer on this, but everyone should check with their tax advisor on this, but our counsel, and we have structured an offer that is a long-term capital gains asset purchase of teams of their businesses. And that is not unique, but it is absolutely a differentiator. And by the way, we're very comfortable with it.
Suppose that, what you will be selling in the future, again, who to, it's very early. And based on your track record and based also on the growth of the business, it's expected, right, that it should be significant. I mean, it should be a significant return, having you incubate the business, guide them, and eventually sell, because I mean, the valuations are, the consolidation in our business is just astronomical, and where we're going to be in 5 years from today. So it actually begs the question, where do you hope to be in 5 years from today? Or where do you hope to be in 10 years today?
Mm-hmm. So Roger, I appreciate the question. I will say I always feel uncomfortable talking about a sale when we're just starting, right? And a sale, our goal is not to sell this business or monetize this business. Our goal is to grow a great wealth management organization. I want to be very clear about that. I don't think about that end. I know that end will be the right one if we build the right team, if we put together the right organization. And so that's what we're totally focused on. And the most important ingredient of the right organization is the financial advisors and their teams. And by the way, it would be rather naive of me to believe that in the event we find the right partner in 5, 6, or 7 years, whether it be an acquirer or the public markets, that I would be exiting the business. That would be a naive view, right? I think it would be important for the stability of the business that my personal plan would be to stay around as long as the new leadership team wanted me to. If they didn't, that's okay as well. However, I think one thing FA should keep in mind is the value of their business is recognized by acquirers now more than ever. And 5 years from now, 10 years from now, they will recognize it even greater, that they own that business. And therefore, my expectation would be that it would be a beneficial event in a number of ways for the financial advisors who own their books in the future as well. And the second thing I would say is the industry has learned, do not disrupt the client relationship with the financial advisor, meaning do not change the custodian, do not change the technology, try not to disrupt the management team too much. It has been a true recognition since the great financial crisis that financial advisors and the wealth management practices they own are very valuable businesses with stable revenue streams, and that those relationships, it's hard to quantify what they're worth, but they're nearly priceless in the value they bring to the business.
Mm-hmm. And so what is your ideal candidate, right, to join your firm or to take a position in?
So really, we are seeking teams that ideally want to be part of an organization that's bringing in the infrastructure, the solutions, the strategic leadership, and the capital. But they also want to be starting to experience the nature of the independent RIA world, meaning more flexibility around the solutions that they're able to bring to clients, more flexibility around the way they live their own personal investing, their own personal capabilities, all within the appropriate governance, of course, from working in partnership with regulators. But teams that have built a business that probably has a high net worth client set. It doesn't have to be ultra high net worth, and it also doesn't have to be strictly high net worth. Now our experience and our DNA is such that the FAs we're speaking to and the firms we're speaking to are predominantly high net worth oriented firms, right? Accessing balance sheet, accessing derivative solutions, being able to get great alternative solutions, private market opportunities. These are inherently things that wealthier client demographics and FAs who service those clients want access to. So in a perfect world, it's a team that does a high net worth business, but I am not so bold or arrogant to say that I won't speak to a financial advisor who's done a great job with high net worth and mass affluent clients. Absolutely. I think that firms that go down that road start to compromise that mandate they give themselves, that I'm only going to do high net worth business. I've seen it time and time again. You need to understand that there is a client demographic that have $500,000 IRA rollovers or $500,000 in savings that are great people and clients who need and deserve great wealth management advice. And I think it's short-sighted to disintermediate that client segment.
Fine. As far as locations, right? Real estate nationally, where's your footprints will be, and where can an advisor be on your platform?
Our footprint currently will be the United States of America. So anywhere in the country that a financial advisor needs to be, we're able to support their business, and they're able to partner with us or any of the firms that we're going to be investing in.
Neat. And management, right? You you're very highly regarded, but you need obviously support, and as you grow. So who are the key leaders within the firm, and where do you see that going?
Thank you, Roger. So I'm really fortunate that a number of members of my former team had the ability to join me. Diego Galan is our Chief Financial Officer and Head of Strategy. He was the Head of Strategy at Deutsche Bank Wealth Management in the Americas, and then the CFO at Alex Brown and Global Wealth Solutions when we were part of Raymond James. He's, I like to say, the brains of the operation, really, has the BCG strategy background and just a wonderful human being. Amy Rizzo, who ran South Florida for us at Alex Brown and at Deutsche Bank Private Client prior to that, has joined, and Amy has experience in the independent RIA world for the last 3 years. Prior to me leaving Raymond James, she had departed to go into the independent space a while back. And she brings great experience and a great reputation with her as well. So she's running practice management and sort of M&A from the Arax Holdings standpoint. Much of our M&A work is done with Redbird, and they provide the resources for that. But from within our holding company, Amy is spearheading that effort. Also, Ziggy Kozelski, a 22-year compliance and supervision head experience, joins us from Deutsche Bank. He and I have worked together many years. And so we bring that compliance and supervision overlay and support to the firms that we partner with. And then we have a number of other folks on the team as well. But those are the 3 key partners within Arax that I'd like to mention. And I will say that the CEO of Ashton Thomas, Aaron Brote, has quickly become just a remarkable partner, a true financial advisor's manager is what Aaron is. And I'm proud to put him in front of any FA team, irrespective of how large or small they may be. He's a truly good leader in the financial advisor space. I'm very proud of our partnership with him.
Excellent, Haig. Look, I don't want to take any more of your time. You're very generous with it. A really, really exciting story, differentiating, right, because where you're from and your past success only precedes future success as well. I mean, you just see it. Amazing backing, amazing vision, and look forward to introduce you to more advisors in the future. And of course, your phone's always open. So really appreciate the opportunity to speak.
Roger, thank you so much. I'm really happy with our partnership as well, and I'm grateful to you for all the opportunity you've shown us in the past, and I know you're continuing to do so now. So thank you for that.
Pleasure. Okay.
Take care.
Excellent.
Bye-bye. Thank you.